Good morning. Welcome back to the show. Tuesday, August the 5th, 2025. James Rule, XRP, the Crypto Teacher. I've been up early. I've been doing a lot of research this morning, and we're going to look at some really amazing things happening. We're going to look at the Director of Innovation at Franklin Templeton, how they are incorporating blockchain into Franklin Templeton. We're also going to look at anti-crypto banks that are going to get punished. We're going to look at the CFTC and what they are bringing to fruition, and we're going to have a good time, people. We are going to have a good time. Now, today's episode is sponsored by Coinbase. Coinbase is an awesome cryptocurrency exchange based in the United States. If you sign up, you can get up to $200 in free crypto. And the neat thing about Coinbase is you can use Coinbase Advanced. This means that you can arbitrage against the spreads. If you have $1,000, $5,000 worth of XRP, and you just go into the regular page and you hit sell, you're going to be paying more to sell than if you were to go to the advanced page and choose limit prices and sell it directly at that price. So click on the link below, check out the discounts, and tell them James Rule XRP sent you by. Let's take a look at the numbers. We're almost back to $4 trillion market cap. We are recovering. Everything's looking great. Bitcoin's at 114,961. Ethereum 3685. XRP in the number 3 position is $3.07. Many of you out there have contacted me. James, it's over $3. Should I buy any more? Should I buy any more XRP? Well, I'm not a financial advisor, but I tell you what, right now we are still looking at the Kmart Blue Light Special, people. And if you're my age, you remember Kmart, you remember the retail store, you remember the blue lights that had all the saving tables and everything else. Well, I'm always going to call it the Kmart Blue Light Special. Back up the truck, load up the truck, and sit there and hold on to it until everybody else has their aha moment, people. Okay, so Paul Barron. I met Paul Barron in Las Vegas, XRP Las Vegas. He had the opportunity to interview Sandy Kaul, who's head of innovation at Franklin Templeton. And they discuss how blockchain is cutting costs to institutions and customers. The banks, the financial institutions. Franklin Templeton is massive, and they are starting to integrate multi-chain ecosystems. She talks about running nodes. And they are also using Stellar, the XLM token, Stellar, people. Now, XRP Ledger, XRP is not shown in the graphs that they show, but I tell you what, she's going to be attending Ripple Swell in November in New York. So have a listen to this 3-minute and 55-second clip. I know it's a little long clip, but I'll tell you what. When you start picking up these breadcrumbs and realizing that these major financial institutions are starting to crack down on blockchain for savings and efficiency, you're going to realize why those little bags that you're holding right now of XRP and XLM and others are going to be very beneficial to you here in the near future. Have a listen.
On more of the actual yield that you earn to you as the underlying investor. So there's even less fees on these tokenized products because we're getting the benefit of operating on blockchain and passing that through to our clients.
Would you say that that cost savings is significant? Is it just an edge? What is kind of the position? Is this something big enough that it would restructure how markets would act in the future?
I think when you look at it from the Franklin Templeton perspective or from the perspective of, say, a corporate treasurer, this will absolutely restructure how markets work. But when you're dealing in small amounts of money, the size of the savings is pretty minimal, but it still adds up, right? Everyone likes getting back whatever they can. But when you're starting to deal with, hundreds of thousands of transactions and hundreds of millions of dollars in transactions, these savings are appreciative. And we do think that it is going to change the way the whole market infrastructure works, that these rails are going to take over and we're going to see all financial services move into this wallet-based ecosystem.
It's interesting that you say that because I'm getting a lot more inbound inquiries from, money managers. Just in general, they've never been exposed to the digital space before. Digital assets is a brand new thing to a lot of their clients. And they're starting to, they discover our channel, so they're always asking who's out there. And I've talked to many people who just are not doing digital assets. So it seems like you guys are in the right place at the right time. When you look at the different levels of blockchains, because I know you guys have different investment tiers, and in some cases it's by the blockchain. I'm just looking at your RWA here as an example, Stellar kind of leading the way here. But what has been the blockchain that has been serving you guys the best thus far?
So we built the system originally on Stellar, which is why we are very deeply embedded with that ecosystem. And they are very good from a cost perspective in terms of being able to handle a lot of volume, particularly smaller orders where you want to keep the costs as low as possible. What we have found is we have a whole kind of blockchain selection mechanism that we use internally based on who the client is placing the order, the size of the order, how long we think the duration of the trade is going to be held. And that kind of dictates which blockchain we go to because the cost structures, the minimums are very different. And the way that they handle the record keeping is oftentimes very different. So we have to have a whole strategy around that. And that is something we have developed through our own trial and error and really being able to operate across all these chains.
Do you feel, though, that I think it was like 50K or something that, was the level for Stellar. Do you feel like that is driving the interest level based on blockchain because of the requirements that you have to hit for certain networks? And is there any plan to change those in the future?
Yeah, I think that as we see volumes grow, we'll be able to bring down all of those minimums. But I think that for now, what we're finding is we're more interested in extending across the different chains and creating that interconnectivity. And then we're just working with each chain where that chain is at the time to figure out the best way of operating with them. So we believe that there's going to be a multi-chain future. We think that having that connectivity across the chains is going to be an important differentiator. This is why we also run our own nodes across as many of the chains we operate on as possible, because we think that's part of our due diligence in being a member of this network. So right now, because it's so early in the development, we're focused more on making sure we're in the right ecosystems. And then over time, we trust that the economics will just get better and better for our customers and for ourselves as the system matures.
That is massive, people. And they're mostly using the Stellar ecosystem, the XLM token. I know I don't talk much about XLM, but it's huge. And with a major financial institution like Franklin Templeton doing this, let's take a look at Sandy's LinkedIn page and look at her experience. Okay, Franklin Templeton, 3 years, 5 months, Executive Vice Chairman, Head of Innovation, a board member of the World Economic Forum Digital Asset Advisory Board, co-chair Digital Assets Committee at the CFTC, which we're going to talk about here in a minute from June 2023 to the present, board member of the DTCC, people, the Depository Trust and Clearing Corporation that is beginning to look at tokenization on different ecosystems, global head of business advisory services at Citibank, JP Morgan Chase, all of these other here. She is so well versed in banking, and now she is taking the lead and incorporating blockchain technology into their ecosystem, which makes it so much more efficient. Ripple Swell is coming up in New York in November of this year. And if you look at the speakers here, yesterday we'd mentioned Chair and CEO of NASDAQ. Here she is, Sandy Call, Head of Innovation at Franklin Templeton. She's going to be at Ripple Swell, Ripple, XRP, the XRP Ledger, RLUSD. I mean, all of the puzzle pieces are starting to come together, people. Now, I'm not going to drag this video out, but we're going to cover some more articles here. So this is the new announcement. And Grayscale offers blockchain crypto funds and within their portfolio, and it looks like they are reinstating founder Barry Silbert as chairman, and he adds 4 senior execs following confidential IPO filing. So Grayscale is going to be IPOing. Barry Silbert is a chairman. He's the founder, and now he's back on the chair. Marcus Mfinger is with RippleX, his SVP of RippleX at Ripple. In a recent conversation with Leonard Shelberg at Being in Crypto, I discussed how Ripple is unlocking the next phase of blockchain utility for institutions on the XRP ledger. XRP is the token that runs on top of the XRP ledger. The XRPL is acting as a foundational layer for financial applications such as tokenization of real-world assets, people. Two recent Ripple partnerships highlight this. Our work with Control Alt and Dubai Land Department has seen the DLD issue title deeds directly on the XRP ledger. Guggenheim Treasury Services is issuing tokenized commercial paper on the XRP ledger in partnership with Ripple and Zeconomy. As these use cases are established on the XRP ledger, new features such as the recently launched EVM sidechain are furthering enabling programming compliant DeFi and paving the way for multi-chain future, people. That's what it's all about. It's about interoperability. It's about taking all of these use case ecosystems that I have been studying and preaching for the past 7 years and making them all mesh together to make the world a better place. As the interaction between decentralized and regulated systems become the norm, the importance of public blockchains like the XRP ledger, which offer transparency, immutability, and security, is growing. It was a really enjoyable discussion, and there's an article here. I'm not going to read it. I'm going to leave a copy of it below, but I tell you what, it goes into detail, and it talks about tokenization, and it talks about the XRP ledger, and it talks about all the aspects of what we've been talking about for years, and now how we're looking at tokenized real-world assets. Do your research, people. Get excited. Nate Garachi. White House preparing executive order that would punish banks that discriminate against crypto companies. Here in the past 4 to 5 years, we've had to deal with what is termed as choke point 2.0. The FDIC told local banks in the United States, do not mess with crypto until we give you the green light. Well, they never got the green light. Most banks would not let you send your hard-earned dollars to cryptocurrency exchanges, and they kept stifling this technology. Well, right here it says that the White House is preparing to step up pressure against big banks over perceived discrimination against conservatives and crypto companies with an executive order that threatens to fine lenders that drop customers for political reasons. Trump takes aim at banks that dumped crypto companies, people. Is coming to an end. Choke point 2.0 during the Biden administration lost a lot of clients, lost a lot of blockchain ecosystems that went out of the United States, that went to Dubai, that went to London, that went to Switzerland, that went to other companies that are pro-blockchain and pro-crypto. And if we scroll down here, you can see where Paul Graywall with Coinbase mentions that the FDIC pretty much destroyed crypto companies and customers from, sending funds back and forth from centralized exchanges and crypto companies. I'm going to leave this article below. I know we've kind of drugged this video out a little bit, but I got some more exciting news. Carolyn D. Pham with the CFTC. Run, don't walk. The U.S. crypto sprint is on. Here is the article that was released on August the 4th, 2025. Acting Chairman Pham launches listed spot crypto trading initiative. People, this is massive. For years, we have dealt with the SEC. We've dealt with the CFTC, writing letters to crypto companies, suing crypto companies, saying we cannot accept this in the United States. Well, I tell you what, this new administration is bringing all of these blockchain ecosystems to fruition, and this is massive news. It says that Carolyn Pham announced today that the CFTC will launch an initiative for trading spot crypto asset contracts that are listed on a CFTC registered futures exchange, design contract market of DCM. This is the first initiative in the CFTC's crypto sprint to start implementation of the recommendations of the President's Working Group on Digital Asset Markets report. Acting Chair Pham announced CFTC's crypto sprint last week. Under President Trump's strong leadership and vision, The CFTC is full speed ahead of enabling immediate trading of digital assets at the federal level in coordination with the SEC's Project Crypto, said Acting Chairman Pham. This is a clear and simple solution the CFTC can implement now. The Commodity Exchange Act currently requires the retail trading of commodities with leveraged margin, and financing must be conducted on the DCM. Starting today, we invite all stakeholders to work with us on providing regulatory clarity on how to list spot crypto asset contracts on a DCM using our existing authority, as I have proposed since 2022. This is massive, people. This is huge. This is an article from The Block that kind of breaks everything down in layman terms. I'm going to leave a copy of it below, and we're going to keep going. Are you excited yet? Are you packing up those bags? Are you backing up the truck? The Daily Texan got this out today. Texas, Utah, and Arizona lead U.S. blockchain adoption. Texas, Utah, and Arizona lead U.S. blockchain adoption. It says, in a recent report from Chainlink and the Blockchain Association, it indicates that Texas, Utah, and Arizona are the top states in the U.S. for blockchain adoption. Citing them as trailblazers, the report says that they are inspiring other states to embrace blockchain and its associated byproducts. And if I'm not mistaken, I think Wyoming should be on this list as well. I don't know why it's not, but it said it is worth noting that blockchain adoption has been heavily bolstered by the popularity of cryptocurrency, its most popular product. Crypto assets offer a myriad of benefits to customers, even outside of the incredible financial profits they have generated. Notably, they offer greater user privacy and faster transactions, which have made them popular within industries such as gambling. So check out the links below. I've left everything in the description of this video for you to tear down yourself. Check out Coinbase. Check out all of my affiliates. You know, there's some amazing things happening, and we're still early to the party, but I'm just so excited to get this news out to you here at 5:30 a.m. in Texas. Up and at 'em. Crypto never sleeps. James Roy XRP never sleeps. Well, I get a little bit of sleep, but have a wonderful day. We'll see you on the next video. Be sure to subscribe. Thank you very much. James Roy XRP is out of here. I told you so.